So for those of you who I haven't met yet and weren't here in the panel this morning, I'm Damien. I'm partner at Block and I joined the firm about 6 months ago, mostly running some of the show on the equity fund. And I'm really happy to be now sitting for the second panel of my day, which is on the future of capital markets in Web3, which is quite a broad topic when you think about it, since the blockchain use case is a perfect use case for the capital markets and has been kind of at the forefront of the innovation in the past years. There's just one thing that I would like to first discuss before we move on to the questions, and which is basically the ongoing and pivotal moments that we're living at the moment when it comes to capital market transformations. We're still living in a world right now where capital markets are mostly being, processed by hand. A lot of the transactions that you see happening on your bank accounts, etc., are still, relying heavily on back office people with a lot of the compliance that is associated to it. With the blockchain innovation, we're moving one step further in the direction of a more secure, faster, more transparent, transaction ecosystem. And that's specifically what I think the capital markets will benefit from in the upcoming years. And who better than the three panelists that I have today with me to discuss that specific thing. Happy to welcome Barbara. She is the head of digital at DWS, an asset management company that most of you probably already know, with more than 860 billion under management at the time. Barbara is also now heading X-Trackers, which is basically a new crypto currency product and platform that they are building. And correct me if I'm wrong on this one. We have Paul-Adrien Hyppolite from Spyco, who's an entrepreneur and founder who we recently decided to back. Spyco is a new way to tokenize, let's say, standard financial products, but you'll probably explain a bit more on that in a minute. And we have Jan, CEO and founder of Crypto Finance, now part of Deutsche Börse Group. And Jan has been involved in the crypto asset management market for more than 6 years now. And I've been dealing with a lot of institutions on that specific topic. So on that specific topic, I would like to kind of kick off things with discussing the current state of decentralization and financial infrastructure, and how basically the blockchain innovation and technology as a whole will and starts to benefit, basically the other way around, but basically how capital markets are starting to benefit from that blockchain innovation. And I'm obviously turning to you, Barbara, because this is kind of a big topic now for big institutions like DWS. And I would like to ask you, how is traditional finance gradually adopting the crypto products and blockchain innovation within its own strategy? And how does DWS deal with this on a daily basis?
Perfect. Thank you very much, Damien, for the introduction and for an excellent first question. So when digital assets first emerged 14, close to 15 years with the launch of the Bitcoin blockchain, it was a very secluded, separate ecosystem that emerged, right? With crypto-native companies, driven by retail investors. Past financial innovations were mostly driven by institutional investors. So it was a very separate, secluded ecosystem where large traditional financial institutions probably in the first instance didn't even realize, and then for a very long time said, this is nothing for us, it's very separate, we can't integrate with the crypto and digital asset ecosystem. What happened then in 2017-18 with the crypto bull run and then subsequent downward spiral is that there was suddenly, crypto entered mainstream awareness. Suddenly everyone had heard about crypto and it was too large to ignore for large financial institutions to also start exploring the topic and thinking about, what can crypto and in particular the underlying blockchain technology mean for our business models. And what we've seen since then is that more and more traditional financial institutions are looking at the topic as starting to integrate the infrastructure. So I think at the moment there's a lot of infrastructure built, for example, at Deutsche Börse, at large banks, at large exchanges, at large custodians happening. There's more and more proof of concepts than we see and first solutions that are being built. And similarly, we at DWS, you already said, we are a large asset manager with around 860 billion assets under management. our role is to provide investment solutions to our clients. And what we see is still these two quite fragmented, separate ecosystems. And we want to build bridges for our ecosystem between these two ecosystems, between the blockchain digital asset ecosystem and the traditional financial ecosystem. So what we are doing, for example, we are taking new digital assets, new native digital assets from the crypto ecosystem, and then wrapping them in an ISIN to make them investable for traditional investors that have not a wallet infrastructure but a normal depository account. And similarly, what we want to explore is, can we take our traditional investment products like Xtracker's MSCI World ETF, right, one of our standard core ETFs, and rewrap that in a token format and make it investable for an investor with a wallet. Because we say wherever the investor is in which ecosystem, right, it shouldn't matter. They should have access to comprehensive investment opportunities.
Thanks a lot. I'm turning to you, Jan, on this, because I feel like you've been there very early in the scene, and you've helped those institutions being acquainted to the technology at first. Because you've been helping them buy crypto assets, and maybe you can shine some light here on what have been the opportunities that opened up crypto and blockchain to your clients, but as well as how do you actually push those products to your clients, and how did you market that in the first place? Because obviously there was a bit of evangelization to be done.
Yeah, thanks very much for inviting me. I think it's important to look from the client side first, and as before I was at UBS, and we looked at, back in 2015-16, we looked at the whole tokenization, blockchain, crypto topic, and we just saw at that time already that there are individual clients who wanted to get access to it. But for a bank or for an investor as well, there are two ways how you can do it. Either directly, so you buy tokens directly on a crypto exchange, for example, or you go indirectly through products. And products, you have private equity, VC funds, where you can invest in, or you go in tracker certificates like the ones from DWS and others. And banks are now have these two options, right? But integrating trading, custody, and everything with all these investments which are being made at the moment are super complex. And so every bank should more think about, okay, which option I want to take. And very often it's just giving clients exposure to products is much easier because you have an ISIN, and for most clients what I see is the demand is in, I want to get exposure to Bitcoin, but I don't need to hold it actually, right? I trust my bank to do it, or an asset management firm. So for banks, as in my opinion, and what I recommend to banks as well, is always go for crypto. Go for this leg, not this one. Because how often have you had, as a bank, a client calling you and saying, I want to buy a tokenized bond? Probably never. And how often have you had a client calling and say, I want to invest a little bit in Bitcoin? Or your clients just invest in Bitcoin through crypto exchanges and so on. So you better go for the investment products on crypto native assets, and then with that you're building up internally the expertise which you can transfer then into tokenized assets. And to be honest, tokenization is not a revolution, tokenization is evolution. So what I see, especially here in Germany, for example, for every new structured product or certificate or security, you print a certificate and put it into the Clearstream vaults. We have stopped that in Switzerland already, I think 20 years ago. It's dematerialized nowadays, and the next stage then from physical to dematerialized will be decentralized. So it's the same underlying, it's still equities, bonds, and so on, but it's just a new way how you can issue those securities or those investments. So that's changing, and banks are really building up expertise now to offer that, not only for crypto, but as well for the tokenized assets.
Yeah, so what you're saying in essence is that you think the crypto asset is a good way to kind of introduce them to the new asset class, and then from there you can deploy the technology to other type of asset class which we know are and are familiar with in the traditional finance. Maybe Paul-Adrien, sorry, you want to bounce back on this. So Spyco is effectively going for tokenization. How do you basically think of marketing that and basically bringing it to your clients? I know you have two types of clients. You can either sell to stablecoin holders because your product will be natively available for them, but I'm sure you also are looking at that big piece of the cake, which is institutional money and retail.
Yeah, absolutely. Thank you, Damien, for the invitation, and to the whole Blockworld team as well. So I'm the co-founder of Spyco. We are Paris-based, mostly stealth right now. We do have a landing page. It's spyco.xyz. You can join our waitlist, read our blog post right now. We operate in the space of tokenized securities, as you said. We have a strong focus on building on public blockchains infrastructure because we think this is where the future of capital markets will be built, and that's actually a core element of our vision. Essentially, we want to bring the securities legs of capital markets, of on-chain capital markets, to complete the cash leg, which already exists, and these are stablecoins. Think USDC, for instance, maybe tomorrow a Euro CBDC. Tokenization, it just means putting assets on chain. It's back on the table, as you said right now, and there are short-term or cyclical reasons for this, and I'll come back to this later in the discussion. But the long-term vision is essentially moving capital markets onto, as you said, more efficient, new and more efficient settlement rails. That's really the core of this. Right now in Europe, you have 30 plus national stock exchanges, 30 plus central securities depositories, a lot of custodians, clearing member, etc., etc. And all these players essentially operate dispersed, separate databases, which were not designed initially to communicate between each other from the onset. So the settlement or finality takes typically 2 days for most asset classes. Sometimes it's even longer, and the process is costly. It locks up a ton of capital, and this is what really we want to address with these new settlement rails. And in parallel, you've seen in the crypto space over the past few years just building up in the open new infrastructures which enable atomic settlement, and which enable sometimes even sub-second finality, which is actually revolutionary when you think in terms of what currently exists in the traditional finance. So in the end, I think tokenization is really this. It's moving assets managed on legacy rails to new rails, and having on the same global and public ledgers, there can be several of them, both cash and securities. Cash being tokenized cash, stable coins, maybe tomorrow CBDC, and securities being money market funds, equity funds, whatever you can think of. Settlement happening instantly across the world at a fraction of the current cost, and this to me really sounds like a 0 to 1 breakthrough compared to the way things work right now. That's why we are bullish and excited to build in the space.
That sparks kind of another question in my mind right now, because we've seen basically how things are set up right now and still nascent, both from institutions, but also like yourself, building that kind of infrastructure basically for standard assets to be on chain already. What about the demand? Where do we stand right now? I think, Jan, you mentioned that the crypto assets were kind of an entry door for selling more of those tokenized and basically crypto products. Which crypto assets do you see right now in strong demand? Have you seen that evolving a lot in the past? Really happy to have your take on this.
It goes with the flow. So 15, 16, some people heard about Bitcoin. Then maybe you remember 2017, Bitcoin went from $1,000 to $20,000 within a year. And then it went down again. So in 2017, there was a lot of hype and rush into Bitcoin, and potentially some ICOs and so on, which is always the bad side. But in every cycle, you have some who try to participate. There's a new big theme which is changing the world. But factually, it's always like Bitcoin and then some other large, like Ethereum, some large coins which show an advanced value to for an investor. And then 18, 19 was down again. It was much more about tokenization. Let's use the technology, but not Bitcoin. And then 21, it was again, okay, Bitcoin, but not tokenization. Now 22, 23 is more tokenization. And in 24, it will be Bitcoin again. And it's the focus, the demand is really on, it's Bitcoin, it's Ether as the entry point. The digital gold version, which is in my honest, I'm quite surprised as well, or rather bullish, because we have seen rising rates, we have seen inflation rates up, we have seen credit easing, we have seen high gas prices and so on. So global turmoil, regional conflicts and so on, and Bitcoin still went up. We have seen several banks going belly up in the US, in Switzerland, and Bitcoin went up always at that time. So it seems, and as Larry Fink has said 2 weeks ago in a TV interview, the CEO of BlackRock, that there are clients who think that Bitcoin can become a digital gold and is kind of a new gold for the new generation. So it has the characteristics of it. So people are allocating to Bitcoin first. I think for the whole tokenization thing, it's not something where investors get excited about, maybe on new asset classes, which it makes investable. So instead of equities, bonds, real estate, which you can invest right now as well, you can have more intangible assets, patents. You can do, maybe some of you remember how the financial crisis started, so the whole mortgage pact. So you wrapped a lot of things into something, and then you sold it and wrapped it again and wrapped it again and sold it. With tokenization, you can make it much more transparent, that you really see the underlying token, the underlying asset. You see, okay, that's a loan on a mortgage on this one, or on this house and this house and this house. So it will make it more transparent from an investment perspective, but it's not a revolution, right? You can invest in those asset classes already nowadays. But it will become more cheaper, more efficient, and more interesting probably. But focus will be again on crypto primarily, and the rest is more an efficiency gain.
Interesting. Do you? I mean, Barbara, maybe you have a view on that as well, because is the demand driving DWS interest for this type of assets, or are you guys one step ahead of the curve, let's say, and have already internally built convictions on the specific project, which push for the creation of this specific extractors product?
Yeah, no, it's a good question. I agree with what Jan said. It's if you look at market cap, it's the crypto market cap is the dominant one, right? I think many large financial institutions see a lot of value in tokenization, see that future that you laid out of a more efficient, more decentralized capital markets. But the question is how to get there, right? That's a 10, 20-year future. But what can we do today already? And if you look at today, it's crypto really driving that discussion. We recently published a paper, our multi-asset team, on the global market portfolio. So we, on a yearly basis, publish on all the asset classes that you can invest in. And crypto is a 70 basis points, so an 0.7% allocation of that global market cap portfolio. So if our investors want to invest into the global investable market, then they might also want to allocate these 70 basis points to crypto. It might sound little, right? But if you think about large institutional investors starting to go into that asset class, it quickly adds up. And that was exactly the decision why we decided to also go into cryptocurrencies and start building these products, because we say we are diversified asset managers across all major asset classes, and crypto is now becoming one of these major asset classes, and we simply want to provide convenient access to these new assets.
Got it. What kind of, because we're touching on a really interesting topic, what kind of growth rate have you seen? I mean, I guess it's pretty different from if you consider last year's bear market, but have you seen kind of a steady growth, or is it parabolic, or because I mean, of course, like 0.7 is still small, but I would be interested in the pace of it. Is it like doubling every year? What are we looking at?
Yeah, no, that's a good question. So the global market portfolio depends on the crypto market cap, right? It's around 1 trillion at the moment. Peak was at 3 trillion in November 2021. So back then it probably was 3 times the allocation, depending on where the overall market stood. But I think what you can see was if you look at crypto ETPs, so wrapped crypto products, you can see that there was really a spike in 2021 in overall AUM, in assets under management for these products. So you can see that demand for these products is still quite cyclical, depending on where the markets stand. To a large extent, demand for these kinds of products is still driven by retail investors that go kind of with the overall market. Question is when this asset class becomes more and more institutionalized and large investors come into the market will kind of, this very cyclical demand with market cap, will that kind of even out a bit more, and will we see more long-term investors that, just don't buy high and sell low, but maybe have a more anti-cyclical investment behavior?
You want to add something?
Yeah, no, from my personal experience, it's the first step, which is the most challenging one. To get into concept and say, okay, now I invest a bit in Bitcoin is the most difficult one. But as soon as you're in, you get excited. Like always, when you invest in something, you start reading about it. And the more you read about it, the more you will fall the rabbit hole. And I think I don't have ever met someone who really read about it, learned about it, and then stopped. I think so. As well, from some reports, we see that wallets which have been created, they normally keep it. Yes, and as you said, the market cap goes down, so the value of those wallets in US dollar terms will go down, but in number of tokens, it normally stays. So in every bull and bust season or bull and bear market, we are accumulating coins and distributing it to more wallets and more clients, which is very kind of promising.
And similarly resilient over time.
Yeah, absolutely.
Paul-Adrien, maybe you because we talked a lot about crypto assets now, but what do you think will drive the demand for tokenized products like the ones you're planning to offer? What would be the main factor of that?
Yeah. So look, I think right now, as we speak, there is a strong cyclical effect behind the, let's say, resurgence of the tokenization hype, at least among the crypto community. And I'm, not familiar with what's happening within institutions, so I'm really focusing on the crypto side of things. And as is often the case, you have products, technologies being developed whose impact is probably overestimated over the short term and underestimated in the long term. And why cyclical? Simply because interest rates are high, again. And, as a result, everyone wants to hold T-bills, money market funds. If you don't hold any, go buy some after the conference, because for the better or worse, that's the exciting asset class of the moment. And the crypto space is no exception. The yield you could obtain by depositing crypto assets, for instance, in DeFi protocols over the past few years, especially during the 2021 bull run, was really high, and it has significantly decreased now, and is below, actually, the risk-free rates that you can get in traditional finance. So people, including the so-called crypto degents, want to hold these T-bills. And the T-bills are coming on chain gradually. And unfortunately, or that's also an opportunity, they are coming in a more or less clean way, I would say, in terms of the way these products are structured, in terms of the way, these products are constructed. You have now roughly 1 billion in tokenized T-bills in diverse forms, but that's roughly the amount on-chain, up from barely zero a year ago. So this is a significant movement that's driving a lot of attention, at least in the crypto and VC space and the crypto VC space community. And the stablecoin supply is still high. In spite of the increase in interest rate in traditional finance. You still have 120 billion in outstanding stablecoin, which is an opportunity to capture for these markets, because they are essentially yielding 0% unless you go by the name of Circle or Tether in this industry. So the market has room to grow, and that's an opportunity.
Maybe a word for the audience on the stablecoin thing, because I'm not sure everybody's aware. But basically, right now, when you're looking to get stablecoins in large amounts, you would go through companies like Tether or Circle, like you mentioned, and those guys will be holding all of your fiat currency in their balance sheet. But obviously, they're not just sitting on it. They're most likely buying cash instruments with it and getting the yield that you're not getting. But at least you can invest in Bitcoin with a stablecoin.
Yeah. So that's an amazing business model right now. Yeah. Basically capturing 100% of the management fees. But that's changing because of these reasons. And quite frankly, I think that's what's driving most of the excitement right now, at least within the crypto space. And then macro and capital tend to be cyclical. This will change, but the ideas, the products that are being built will remain. And so I think that's why that's an important moment right now. We are typically focused on these kind of asset classes at Spyco as we speak, but then we think there is a room to move into bonds, equities as we grow and develop these on-chain capital markets that I mentioned.
Yeah, and it's a perfect transition to the elephant in the room. So, of course, I'm going to talk about regulation, which is the big topic nowadays. And so maybe Paul-Adrien, because I know you've been working sort of as a policy maker for the French Treasury before, so you probably have good insights on this. How do you see the regulation being, now kind of worked around? Do you feel like it's going to hinder innovation in the long run, or do you feel like the complete opposite? Like, what's your take on this?
Yeah, so I'm not going to lie, being in the entrepreneur startups seat right now, it's obviously super challenging as a startup to operate in a space such as financial services because of the heavy regulatory framework and the compliance things that exist, let alone capital markets infrastructure, which is even more difficult. And not to mention public blockchains also, which are still misunderstood and still carry a big taboo among several business and policy circles, I would say. But even if the regulatory framework is heavy and the licensing authorization process is lengthy, and to be honest, I think that's the main issue. To me, at least, it doesn't sound like the regulation is the first issue. The primary issue is getting the license, getting the authorization to operate. It takes a lot of time, and that's the main burden for sure. But I think we are, to be honest, fortunate enough to operate in Europe because the regulatory environment is pretty clear. You now have with MiCA a regulation to govern tokenized cash, stable coins. It's called e-money tokens. You have the markets in financial instruments regulation, which governs securities, and we pretty much know, as opposed to the US, what a digital asset or a stable coin, for instance, is and what a security is. Securities law is not fully harmonized at European level, and so there are still many national intricacies. But in a number of jurisdictions, you can issue natively securities on a blockchain. And this is not only the case in Switzerland. This is the case in France. I think this is the case in Germany as well now. So many things can actually be done. And on top of that, I'll conclude with the fact that European institutions have also recently removed a key regulatory requirement for listed securities, in that case, which was to be registered in a central securities depository. Right now, you have the possibility to list securities on infrastructure that operate on the blockchain. And that's a big thing. So there's definitely room for innovation and market structure changes in the space.
Barbara, maybe you want to bounce back, because you've gone through almost the same process, right, internally at DWS. Avi, because you've been working on TradFi products as well before, do you feel like there's been a big difference in pushing for those new products to the market? And how have you dealt with it overall? Mm-hmm.
Yeah, no, it's a good question, and I can agree with, I was nodding a lot while you were giving the answer. I think, of course, for a fiduciary asset manager, it's a precondition that we have regulation in place in order to launch products. I think, especially in Europe, we've made a lot of good progress, both on the European level, but then also in different jurisdictions on a national level in certain blockchain-specific regulation that's filling certain gaps. And one example, both of you mentioned, is MiCA, right, the Markets in Crypto Assets Regulation. So, for example, for the crypto ETPs that we are launching, they are traditional securities, so they will fall under existing regulation, in particular the MiFID II regulation. But then there's certain parts to these products that are related to cryptocurrencies that are previously unregulated simply because they're new, and that's, for example, crypto asset service providers, for example, a crypto custodian that wouldn't be regulated under traditional regulation, but that is now in the European Union regulated by this new regulation, MiCA. So it's kind of this combination of the two. But I also very much hear what you said in your second point, is that while we have many national efforts as well. So, for example, here in Germany, you can issue tokenized securities. So you can issue, for example, a money market fund generally as a token on a public or private blockchain. If you would want to do that, for example, with an ETF that is exchange traded, you would have certain limitations to that token then being admitted to trading on a regulated exchange at the moment, because it doesn't adhere to some existing regulations, for example, to CSDR. So while there is good progress, what I'm trying to say is there's good progress on certain regulations, but overall the whole picture is not coherent yet. There's certain parts missing, and that will develop with more and more use cases coming into practice, because tokenization to a large extent is a vision today, right? And stablecoin is probably the most prominent tokenization use case, but besides that, no other asset class has really been tokenized on a larger scale. And I think we need exactly what you're doing, right? Startups and large financial institutions bringing about products, finding these gaps, discussing with the regulator, and seeing, for example, then with the DLT pilot regime, how can we, these regulatory gaps that we are having or mismatches, how can we evolve with that?
Yeah. I fully agree with this. Jan, you want to add something? I mean, you've gone through all the steps of the regulatory hurdles because 6 years ago it must have been something quite different than now. At least there was less of a framework. What's your experience dealing with this?
So, coming from a traditional banking side, I was surprised that it took that long for regulators to put in regulatory frameworks in place. I think what happened with FTX could have been avoided by applying easy, simple regulations. You don't need super sophisticated regulations. You can do it very easily. And what the US is doing is not investor protection, but is driving Coinbase and other professional, serious crypto players offshore. So that's the opposite of what a regulator should do. But then in Switzerland back in 2016-17, to be honest, I completely underestimated the heavy work it is to bring those worlds together. There is a lot of bias. So at that time, everyone told me what, Bitcoin? Are you now in money laundering? So having been then the first crypto company who got a FINMA license, first on the asset management side and then on the investment banking side, was a big effort and was super exhausting. But at the same time, now we really see the trend, and as we always focused on that, we missed out a lot of momentum because we're only focusing on banks and only on the regulated business. And in the past 5-6 years, the business was in unregulated retail, so was not where we were. But now that's changing, and all the ones which are not regulated and retail were suffering because now the big demand is coming from the institutional investors. Just one word in regards to BaFin. When I talked to BaFin in 2018, they had no clue. They had, I think, fintech@bafin.de was the email address. You could send an email, then they scanned you a letter. So they wrote a letter, answered the question in the email, printed it, signed it, stamped it, and scanned it and sent it back via email that there is no regulation on crypto. But BaFin has made a massive progress, and as I agree with you, there's one is the MiCA regulation European level, but I think Germany has really done a lot and is very advanced. In France it's similar. Macron is doing an amazing job in positioning France as a fintech hub and a crypto hub and everything. We see a lot of demand from the US companies because you don't have the regulatory clarity there, so they are moving very often to France because of the good marketing. But now with MiCA going live end of the year, this will be super helpful, and with kind of the regulators now really understanding that Bitcoin is not just money laundering, but there's more behind it, it's super helpful. And we should really use this opportunity in Europe as well to grow and build, because I think it's the first time in history where Europe is more advanced in financial markets regulations than the US.
Yeah, it's pretty exciting as well, right? Because, and this kind of feeds my last question on the overall state is what is missing for adoption? We've discussed regulation, and I think it was a big part of it because most of the liquidity on the market is locked behind that regulation wall at the moment, and it's true that even though crypto has seen a tremendous expansion, it is still kind of dragged down by this lack of KYC and overall regulation and framework. But I think we're still slowly getting there. Now, when it comes to the infrastructure side, I think it's a very interesting topic that we touched upon slightly, but I would like to have your view, maybe Jan, you can start off on how do you think the overall financial infrastructure is going to migrate towards more of a blockchain operated infrastructure? Do you feel like it's happening? Do you feel like it's going to happen tomorrow, in 5 years? What's your view?
So yes, the short answer, yes, it's happening. The bad answer is it's not going to happen tomorrow, but probably in 10 years. So it's always takes longer. but I don't think there's no way to avoid it. All the bookstores said, yeah, but people will still read books and will not just read websites. Yes, but then they invented Amazon. So I think the way how we invest, we transfer assets, we own assets will change fundamentally and will not be centralized. And sorry to say that, being now part of Deutsche Börse with Clearstream and the largest CSD in Europe. But you're going to have an issuer kind of, but then the assets will be decentralized. And that will bring a lot of opportunities. I think from the private banking side, it's super attractive because you will know about the client's assets not only in securities, so not only equities, bonds, maybe a mortgage, but you will know what paintings they have, what the company assets are, what cars they have, and so on. So the whole tokenization topic. And then you can really start to comprehensively advise a client and add him additional information on his assets, on his wealth. I think that's a side benefit which private banks are massively underestimating. But besides that, I think it's absolutely astonishing what we have kind of wished for in 2017 already. What's happening now? Very often it's behind the curtains. I can just speak about Deutsche Börse. Deutsche Börse is building, or has now built, with the acquisition of our company and with other initiatives they're building the full value chain, from issuance to trading to post-trade custody, reporting, integration into all the systems. And that's a game changer. If a bank who wants to give their clients access to crypto tokenized assets can use the existing infrastructure they have and go with Deutsche Börse and issue a certificate or a product, an asset, and then trade it on Xetra and book it in Clearstream, the bank doesn't need all the infrastructure itself. Right now, it's in the past 3 years, I would say was very much driven by the innovation teams, which had a lot of budget because we're in low interest environment, so they had to come up with new solutions. I don't think that every bank will then have its own custody and own trading and own issuance platform, but it's about scalability, it's about interoperability. So I rather see kind of an independent infrastructure provider like Deutsche Börse to come in place and offer those services along the value chain. So it's definitely happening.
Interesting. Paul-Adrien, you've written a very good article and you posted it almost was it yesterday or the day before? Yeah. on some of that topic on the infrastructure side, because and which is part of the mission and the reason why SPICO came to be. I know, for example, in the US they push for a T+0 settlement by 2026, and maybe you can shine some light on your vision of that happening through the use of blockchain a bit.
Yeah, no, happy to do so. I think the infrastructure, the bet we take at least is that the infrastructure, and by infrastructure I mean the base layers, the so-called layer ones, the scaling layers, the layer twos, etc. that has been built in the open. It's all open source by the crypto community over the past few years. Is mature enough to host regulated products through smart contracts, permission smart contracts, and also more broadly financial services at scale. There are limits. Throughput and latency will be an issue if a lot of activity happens on chain, for sure. Account abstraction, privacy layers, all these things need to be figured out. But we are pretty confident at SPICO that they will be by the crypto community and as demand grows over the next years. But really, I think the way the system works right now is that there's so much technical debt, and if you focus on Europe, you also have sort of political debt with fragmentation because national capital markets have been developing along national borders, that it's really complicated to just upgrade the current system without a more fundamental breakthrough. Using public blockchains instead of just updating the existing databases. And just maybe 3 things that, in our view, need to be improved for these markets to take off. First, I think, and that more engagement from institutions is needed, and deeper pockets of capital coming onto these rails and bringing both their expertise and the capital needed for this to scale. And quite frankly, my opinion is that the US institutions are quite ahead of us. France for sure, maybe Germany as well, Europe, let's say. in spite of the very complex political and regulatory environments that they are now facing. Just to take an example, I've been to a few crypto conferences. For instance, Token 2049 in Singapore, Mainnet, Breakpoint in Amsterdam recently. At all those conferences, you had US asset managers and traditional asset managers, like Franklin Templeton, for instance, on stage, speaking to the crypto community, learning about this stuff, and actually also launching products on this. So I think we need to catch up a little bit. BlackRock obviously is in the spotlight with the spot Bitcoin ETF, but they've been managing the Circles reserve, the USDC reserves for quite some time. So these guys are actually in the space, and once things are figured out in the US from a regulatory and political standpoint, I think it can quickly grow very fast. Two last things to mention. I think we need better tokenized products. Right now, what we see is not, as I said earlier, structured in a proper way. It's mostly offshore. It's mostly issued by, in terms of the tokens, issued by non-regulated entities. So it's difficult for institutions to engage with these kind of startups, and for good reasons. So there is like a chicken and egg issue on that front. And last but not least, I think we need better integrations between the traditional finance rails, the traditional database of the financial services industry, and the blockchain, because we need to build bridges actually between the two. Like the securities that have been issued in the traditional rails will not migrate suddenly to the crypto rails. So there is a legacy, a stock, let's say, to manage, and we need these communications to be improved. So that's why also institutions are needed in the space.
Barbara, you want to add the last word? Like, what are the next steps at the AWS? I mean, ETC is already a big move, but what's in the box?
That's a good question. So there's 3 digital asset use cases we are prioritizing. First ones will be the crypto ETCs. I think that was a very natural first use case for us. Same as Jan, you said at the very beginning of the panel, crypto is the largest digital asset use case at the moment, where we see most market demand, where we wanted to offer a product. The other 2 topics that we're looking at are stablecoins and tokenization. So stablecoins, I think what you said was quite interesting. Stablecoins for me are more payment products, while a tokenized money market fund is more an investment product. On a payment product, I don't necessarily need the yield, but the one-to-one pack that is, for example, by Mika guaranteed is quite important, while on you don't get any yield on it, but you use it as a payment product. And then so that's the second topic we are looking at. We think there's a large developed stablecoin market in the US. You said it, that there's around $120 billion market cap. We think the European market also needs a stablecoin as a payment leg for transactions, and we want to see if we can play a role in that ecosystem, similar as other asset managers serve as reserve asset managers to large stablecoins such as USDC. And then the third topic is tokenization, and that's, I think, for us, a lot of conceptual work at the moment, where we are trying, really understand, Jan, what you just said as well, how does the future value chain look like, and who's taking on which roles? Because the cards are being reshuffled at the moment, right? Everyone wants to be the tokenizer, everyone wants to be the custodian, everyone, and everyone wants to grab a piece of that new pie that is being created. It's not going to be everyone, right? It will be, a few large providers providing many of these services. And the question is, who will it be? And then also, which asset classes will become tokenized, right? So it's super good to see companies like Spyco looking at specific use cases, as your example with money market funds, and really saying, I see this use case, I see demand for tokenized money market products that differentiate themselves to stablecoins. So this is, I think, something where we really want to understand, both from an infrastructure perspective, but then also from a use case perspective, how can we play a role here?
Thanks a lot. Very insightful answers from all of you on the future. I think we have time for some questions. I'm not sure, Dominic, you're the timekeeper here. Do we have time for some questions? Okay, awesome. Do we have questions in the assembly for the panels? Come over there. Thank you, Roch.
Thank you. Hi. So, your vision 10 years down the line, I think you mentioned 10 years, for the fully blockchained capital markets. What is that going to look like? Is it going to fully cannibalize of what Deutsche Börse is doing today? You mentioned the various layers, right? From clearing, custodian services, etc., where you charge, right? Something for those services. So is that going to be replaced by one big virtual marketplace with essentially everything being handled by those smart contracts, so you don't need all these services, right? This is sort of, I guess, what blockchain has always been promising. And number one, is that the case? I mean, is that the vision? Number two is, if that is the case, so who's going to, some people will lose, who's going to gain, right? Is it a new opportunity, or is it essentially, freeing up capital that is currently used to fund these inefficient, the inefficient way the markets are working? I think, Paul, you mentioned, various jurisdictions, various stock exchanges, and so on and so forth. So is it and how's Spyco going to benefit from it? So it's not quite clear who the winners are going to be.
Who wants to go first? Jan, you're already ready.
Yeah, thanks very much. Very good question. I hope Deutsche Börse will leave it as a winner if they do it the right way. But I don't have a crystal ball. But as you said, right, probably Deutsche Börse will still exist, but it will look differently. It's you need to adopt to new situations, to new technologies. So bookshops, they still sell books, but not in physical stores, but online, with online shops. So Deutsche Börse or financial institutions will go through the same. I think there are new ways what you can offer in regards to tokenization. I think the biggest change will be that we're going to see an explosion of investable assets. So you're not going to, when you call your bank or you log into your e-banking, you won't see just your DAX stocks, but much more. And otherwise, it's an efficiency gain. In the best case, you won't feel the internet. Remember 20 years ago when the internet came up, or when you logged into the internet with the strange noise, and okay, now I'm online, so I can now go on a website. Nowadays, everything is connected to the internet. So I wouldn't care that much, or I would ask the questions differently. Like, it's not about how the blockchain will be, but it's more about different use cases, and there you have a lot of efficiency gains from a process perspective, but then as well a lot of new use cases from an investment perspective. There are millions of use cases which you can look at, but I'm more focused and specialized on the financial industry, so there are a lot of opportunities for banks, how they could use this new technology. But probably you will still log into your e-banking or to a portal with your bank where you will interact with. I don't think that's going to change. Maybe you're going to use a VR goggle. That's it, right?
I can give it a try too. I think there will still be tons of regulated entities and players. Just they're going to change in terms of the way they operate and the infrastructure, the database they use. You'll still have wallet providers, namely banks or fintechs, providing these things to the client and abstracting all the different complexities that will arise from this new database. You'll still have issuers, namely asset managers in this world for sure. You'll still have market infrastructure exchanges in this case, because you'll still have needs for specialized centralized computing off-chain with infrastructures connected to the blockchain. So it's essentially moving from the intranet of banks and custodians to the internet of value, with this new shared database underneath, but with still regulated entities and market operators on top.
Do you want to add something, Barbara, or?
I think it was a comprehensive answer. One example might be, I think there's certain roles that you have today that will change in future, but it doesn't mean that we won't have a fully decentralized financial system, right? There will still be, in part, centralized providers providing services, while parts of the infrastructure is decentral. And the CSD is always an example that is being made, right? That keeps the register today. If you look, for example, at the EWPG, the German regulation that allows you to issue crypto securities, or securities based on public blockchain, you still need a trusted regulated service provider, what they describe as the crypto registrar, that is the interface to that blockchain register now, right? So where you had the CSD, you have the crypto registrar. It could be the same entity providing the service, or it could be a different entity, right? That's the big question, who will it be? But I think many of the services that you have today, you will also need in future. There's certain services, for example, in the trading and post-trading processes that might become more streamlined, but to a large extent, I think there's a reason why we have these service provider and why they are heavily regulated, and yeah.
Maybe just the CSDs, removing the CSD is always a very favorite topic, because it just costs and doesn't bring added value. But at the same time, Deutsche Bank doesn't want to work with or rely on Commerzbank's KYC or treasury system or whatever. So I think you need, even on the tokenization side, you need to have kind of a trusted intermediary, an independent intermediary, who is kind of saying, okay, good, we have 1,000 gold bars in the vault, and we're going to issue 1,000 or 1 million tokens based on that. And if Bank A is doing that, maybe Bank B doesn't trust that Bank A really has that much gold in the vault. But if you have an independent one, this trust level is much better enforced. And I think that's where a CSD has still a different role, but still kind of a role in the future. But banks will probably, anyway, as you said, right? Banks will have different services. Things are changing, roles are changing. Right now, everyone is doing everything, or many, but actually in the past 20 years, the financial industry has changed so much already. Look at branches, physical branches. They're disappearing all the time. Outsourcing. How many banks do trading actually themselves? You as a client, you're using your e-banking tool and think your bank is trading. No, the bank is routing the order to Deutsche Bank. The Deutsche Bank is executing with a broker in the US and trading back, reporting back. So that has been kind of fragmentalized, or has been changed already in the past 10, 20 years, and it's going to be further a change in the future.
Agree. Yeah, it's an evolution, right?
It's an evolution, absolutely. Yeah. And it's a new technology which allows you to change the setup even further. In the end, the bank, for me, needs to focus on its clients and serving its clients in the best way and with the most comprehensive offering they can. But you cannot be everything. Yeah. Mm-hmm. Banks realize that as well. Agree. We cannot run our own core banking system. We should rather buy a third-party system which is being used by several other banks, so you can share the costs. You cannot be the perfect asset manager, so that's why there will be asset managers. There will be focused, specialized asset managers. You will have real estate asset managers, bonds asset managers, and so on, regional asset managers for Chinese stocks, and that's still going to be the same.
I think we're over time now. Thanks a lot, guys, for taking part in the panel. It was super insightful, and I'm glad that we were able to have you all on stage at the same time.